Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is August 7th, 2025, and we're diving into Vistra's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Vistra has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Great. Let's get started with an overview of Vistra and their latest earnings report.
Vistra is a leading integrated retail electricity and power generation company. They have a diverse energy portfolio, including natural gas, nuclear, coal, solar, and battery storage. In their Q2 2025 report, they highlighted a net income of $327 million and a cash flow from operations of $171 million.
Revenue and profitability overview. Let's start with the top line. Vistra reported operating revenues of $4.25 billion for the second quarter. John, how does this compare to their profitability metrics?
Vistra's net income for the quarter was $327 million, which is a decrease from the previous year. However, their cash flow from operations was strong at $1.171 billion. The adjusted EBITDA came in at $1.349 billion, indicating solid operational performance despite some challenges.
What were the main factors affecting their profitability this quarter?
The decrease in net income was primarily due to higher plant outage expenses and increased depreciation and amortization. However, their ongoing operations adjusted EBITDA was robust, driven by their integrated business model and strategic focus on core operations.
Strategic initiatives and acquisitions. Vistra has been active on the strategic front. Can you tell us about their recent initiatives and acquisitions?
Absolutely. Vistra executed a definitive agreement to acquire 7 natural gas facilities, adding 2,600 megawatts of capacity. This acquisition will diversify their natural gas fleet geographically. Additionally, they received NRC approval to extend the operating license of the Perry Nuclear Power Plant through 2046.
How about their investments in clean energy?
Vistra is making significant strides in clean energy. They've begun construction on solar and energy storage projects in Illinois and California, and they're advancing projects with major tech companies like Amazon and Microsoft. These initiatives align with their commitment to sustainability and zero-carbon resources.
Financial guidance and market position. Let's discuss Vistra's financial guidance and market position. What are they projecting for the rest of 2025?
Vistra has reaffirmed their 2025 guidance, with ongoing operations adjusted EBITDA expected to be between $5.5 billion and $6.1 billion. Their free cash flow before growth is projected to range from $3.0 billion to $3.6 billion. They've also hedged 100% of their expected generation volumes for 2025, which provides stability against market fluctuations.
How does their liquidity position look?
As of June 30th, 2025, Vistra had total available liquidity of approximately $2.618 billion, which includes cash and cash equivalents and availability under their corporate revolving credit facility. This strong liquidity position supports their strategic initiatives and operational needs.
EPS forecast and analyst expectations. John, let's talk about the earnings per share. Analysts were forecasting an EPS of 98 cents. How did Vistra perform in this regard?
Vistra met the analyst expectations with an actual EPS of €98 for the quarter. This alignment with forecasts is a positive indicator, reflecting the company's ability to deliver consistent financial performance despite the challenges they faced.
What does this mean for investor sentiment?
Meeting EPS expectations generally boosts investor confidence, as it shows that the company is on track with its financial goals. The positive sentiment is further supported by their strategic initiatives and reaffirmed guidance.
Key takeaways. As we wrap up, let's summarize Vistra's performance this quarter. John, what are the key takeaways for investors?
Vistra reported a net income of $327 million and an adjusted EBIT of $1.349 billion. They met the EPS forecast of 98, which aligns with analyst expectations. Their strategic acquisition of 2,600 megawatts in natural gas capacity and investments in clean energy position them well for future growth.
And thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Vistra's performance in the comments below.